Hello, this is Ed Butowski. Welcome to another edition of Wealth Transparency. Today we have Andrew Tang from Turner Investments and Michelle Connell from Portia Investment Management. Today's subject is going to simply be about the war going on in Iran and between Israel and the United States. So, Andrew, you and I were just chatting, and I made the point that if you look at the world GDP, it's about 119 trillion, and only 2% of the world's GDP, that's the gross domestic product, comes from the Middle East. So why in the world is the stock market getting hammered right now?
Yeah, this is all a knee-jerk reaction, in my opinion, about the supply of oil and how disruptive it can be. Because one of the boogeymans out there is inflation. And obviously, we have had the largest reversal of inflation in the energy sector, and specifically with oil. And that's why if oil spikes to, for example, right now it hits $80 a barrel for the August futures. Spot prices hit 84, 85-ish, somewhere around there for West Texas intermediate crude. So this is all about speculations how we are going to experience an inflation spike, and not knowing how long the war is going to end. It's created a new level of uncertainty. Again, market hates uncertainty, and that's why the market's selling off.
Michelle, what's your view? Do you believe that inflation is the big problem, or do you think that it has to do with trade in the Middle East?
I think what Andrew says about inflation is correct. Obviously, we're not dependent upon the oil from the Middle East. We're an exporter at this point, and the EU has been smart and gotten themselves away from being dependent upon Russia. I think it's the uncertainty, as Andrew said. It's also the fact that it's not going to be as clean as initially was communicated to us. It may take a lot longer than we would like. It sounds like Iran is willing to hunker down and do what they need to do, to keep prolonging the process. And that's markets, as Andrew said, markets never like uncertainty. And I think if you also throw in the fact that a lot of the LNG that I found out today that Taiwan and South Korea is dependent upon for the chip industry, that could be a big problem if they don't have access, so that they can continue to make all the semiconductors that we need for AI. And obviously, Taiwan Semiconductor, the biggest producer in the world, needs that LNG. So I don't think it looks as simple as it did in the beginning when we were told 5 days in, out, it's going to be simple. It's not going to be simple. And now you've got other countries in the Middle East, that are having to evacuate. I don't think a lot of that I don't think it was thought about, maybe the consequences, maybe it was, and we don't know about it, but it's a little bit messier and complex than we think.
So from the standpoint of the oil that comes out of the Strait of Hormuz, which countries is that coming from, Andrew?
That's coming from the Middle East, basically, and it doesn't really supply. It doesn't affect, like, for example, U.S. as much because we are self-sustained and a net exporter, like Michelle have said. But it only applies to 20% of the oil right now. The Straits is closed, but other routes are also affected as well because they're waiting for backup. They're waiting for the naval accompanying them, making sure that they're safe. And basically, you have a slowdown of global oil transport and trade. And then you have the airlines also largely disrupted. That includes human passengers as well as goods, right? So you have a global supply chain that is somewhat disrupted, but not exactly a shutdown like COVID. But all that, it's going to cause a chain reaction in delayed of delivery, and also some way, somehow, price is going to be inflated because of the disruption.
Well, to both of you, which countries specifically go through the Strait of Hormuz? Because, we talk about Iran, but what other countries use that, and where did that oil go it's not going to now?
I don't know how to answer that. I didn't dig enough into my research today. Going back to what Andrew said earlier, a lot of the countries in the Middle East that are exporters of oil, I'm assuming it's like
Yeah, I mean, we can name it right there. It's from
Saudi Arabia. Who
Kuwait.
else? Kuwait.
It's Kuwait, and then Bahrain, there's Qatar, and then the UAE. They all have to go through there. So it's really limited to those countries of, exporting oil. It has to go through that strait. It's a dead end, right? It's really nothing else over there besides those countries. To answer your questions specifically, those are the countries, for their customers to receive the oil that serves, all over the world. From there.
So there's definitely a systemic issue here where if you have a holdup in the Strait of Hormuz, that it's going to expand to other areas.
Right.
Well, I think we also have to include not only the oil, but the LNG that I talked about earlier, and put that into the equation. How many countries are really dependent upon that LNG? I mean, even the EU has been trying to get away from Russian LNG, and I think they have a goal of 2027 not to use any of it. Are they using some of that LNG from the Middle East? Probably, and probably also from us. So that is also going to impact inflation and trade.
Yeah, but if we're forward looking, and that's what the stock market's supposed to do, you could be looking at a very free flowing Middle East without the problems of Iran being there. So you could have a real tide change in the way the Middle East functions, years from now. And the stock market looks out, 2 or 3 years. And right now you can't help but look and think that things are going to be very positive in the Middle East with trade.
Yeah, I have to agree, because in light of what's going on, it's a huge mistake for Iran to bomb his neighboring countries, especially with the UAE and Saudi Arabia. I mean, what are they thinking? I mean, it's just a desperate effort to cause chaos, in my opinion. And then it goes to the question of how long can they really last with their military supplies, right? So with the current missiles that they have, we really don't think that they can last much longer, maybe perhaps only a few days if they're really carrying out these heavy missiles attacks. But the drones, however, it's where the problem is, because they have roughly about, 80,000 drones, and they can probably produce 10 a year at wartime. And so if we continue to be able to intercept these drones like we have, and that way we can see that they could run out of military supply other than humans. And I think the next leg of this attack is going to be cyber attack. So I think this is one area that I believe it's not going to correct itself too far.
So,
did you also, in your research, and Andrew, did you read about how critical water is and the desalination plants are over there, and that those are starting to be targeted by both sides? That could be part of the equation as well.
That's going to be a humanitarian crisis there. Yeah, for sure.
Yeah.
So let's just assume that the stock market has this all wrong, and the market has gone down. What stocks have jumped out at you that you cannot believe are down as much as they are, looking at it from a total return standpoint?
Well, I mean, if I must say, it has to be Microsoft, because this whole sell-off for the stock market has more to do with SaaS sell-off than the war with Venezuela or even Iran right here, for example. Would I go out there and buy Lockheed Martin and RTX? Probably not, because we've been building these for how long? And then outside of military exercise and war, how else are we spending these items and using them? But in terms of value here, I think Microsoft is the company that is the baby that's getting thrown out of bathwater, because software companies are not created equal. I label them as layer 0, layer 1, and layer 2. So layer 0 is operating system, layer 1 is database, and then layer 2 are everything else that's on top, like Adobe, like LegalZoom. I always think about LegalZoom because with the arrival of ChatGPT, why would you use LegalZoom anymore? So in my opinion, it's either going to merge or it's going to zero.
So Michelle, which stocks, when you look at your list of companies that you monitor every day, Which ones are you just completely dumbfounded over?
I think it's interesting now that a lot of your consumer staple stocks and your industrials and the defense stocks that Andrew was talking about, their PEs now are higher than a lot of the technology companies. And the tech companies are obviously growing faster. And a lot of these defense companies, because I cover and I've written on a few of them for a column, they've gone up like 40-50% or more, and they're prohibitively expensive. It's too late for that. I think you can go in and find some good tech stocks. And I also think because of the panic that you've seen more of it occur in the Asian stocks, I think if you don't have exposure to that part of the world, and there's a lot of technology stocks that are still pretty inexpensive over there. So picking up, Asia, emerging markets, developed and not in Asia, and also going back and looking at your tech stocks. Like I still like Broadcom a lot. I mean, I've owned that for a while, and they performed very well yesterday when they reported earnings. And they're taking their estimates out a huge amount. I can't remember exactly. I think it's 100 billion in terms of AI revenue. I think there are still technology stocks that you should own for the long term. But again, being strategic and thinking about just like the tech, internet situation back in the day, there are those that if you held on for 10, 15 years, you did quite well. Not all of them, but some of them.
Yeah, there's no question about it that there's always opportunities, and the defense stocks are absolutely very expensive, and they're not that fast growing. That's
Yeah.
the other thing that
No.
normally when you have a high PE, you're looking at a company that has grown and has very strong growth capabilities. These are all going to grow based on contracts by governments or from big airline companies. So you're not going to get a lot of surprises there other than the high valuation. So with that, just kind of putting a bow on the oil situation, are there any oil stocks that you would be buying?
Well, specifically, we will look for undervalued integrated oil, but um, the oil tanker, the transport, the midstream area, it's also very pricey right now. So, as a bargain hunter, it's very difficult to jump into these high price level when high PEs and when prices have all run up. So it is a little bit difficult here. Again, I would not specifically chase after energy right now because this to me is just a short-term reaction. However, the stock market is present value of futures earnings. So in my philosophy, looking at this is that I prefer the tech sector, and the ones that are SaaS proof, for example, AI SaaS proof, are the ones to really pay attention to. And Microsoft being one of them. Oracle is possibly another because that's database related. Can their customer base say, I'm going to replace you with AI? And certainly not if you remove Windows. You can't even get your AI running without Windows, for example. And so from that point of view, I look at the moat and the economic moat that they have built around the business. Even given with what AI can deliver, who are going to be the winners?
One of the companies that I love, and I'm a little more risky than a lot of people, is ERY, which is a Direxion ETF, which is 2 times the bear on oil prices.
Yeah.
So if you believe oil prices are
Smart.
going to go lower, this has been up for the last 3 or 4 days,
Mhm.
surprisingly,
Yeah.
even with oil prices rising. A lot of
Yeah.
other people are thinking the same way as me, looking for bargains,
Yeah.
thinking that oil price spike is going to be short-lived. So,
Mhm.
Michelle, are there any oil stocks that you would be buying?
Kind of feel like Andrew feels. A lot of them are overvalued, especially. Now, I look at stocks the same way. Maybe Exxon, they got a decent dividend. It's growing about 4 or 5% a year. What I like about them is they have a lot of properties around the world that are very strategic. They're looking at taking advantage of Venezuela. They're getting a good deal on that. And they're also looking at alternative energy, and they're going into, I don't know exactly how, but they have an industry or a sector within their company that just focuses on energy for data centers. So that's going to be part of their portfolio as well. I wrote out about that stock this week, so that's why I know a little bit about it. And I think that's smart, right? Because they're getting away just from the carbon energy, and they're looking at what they can do with batteries and focusing a large part of what they do with those batteries on data centers.
So, Michelle, you say that you write. How can somebody get a hold of your writing?
I contribute to stockinvestor.com, dividendinvestor.com. I also write a weekly article or column for AI Invest, which is a platform.
Okay, and Andrew, you put out some brilliant investment notes. How can people get a hold of what you put out?
Yeah, you just send a request to andrew@turnerfg.com, and I'll be gladly to add you to the weekly list.
Well, for those watching, please share this with your friends. This is really good, timely information. And I appreciate Michelle and Andrew coming on and sharing their thoughts with us today. So again, this is Wealth Transparency, and I'm Ed Butowski. Thank you.
Thanks for having me.
Thanks, Ed.